Hello, and welcome to Lay of the Land, a podcast from global law firm K&L Gates, where we discuss the latest thinking, new developments, and best practices in today's real estate industry. We hope you enjoy this discussion. Please reach out to suggest topics or guests, or with questions about real estate law.
Welcome to a new edition of the podcast. I am David Rubenstein. I am an attorney in the Seattle office. I focus on real estate. And I am here with Aaron Laing. Aaron, would you please introduce yourself?
Good morning, and thank you, David. I'm Aaron Laing. I am I'll call a recovering attorney. I was a practicing land use real estate attorney here in the Northwest for 20 years. And about 2 years ago, I made a move into commercial insurance. I work with a nearly 90-year-old company out of Bellevue, Washington called Parker Smith and Feek. And my focus is real estate and construction, kind of all aspects of the real estate life cycle.
Terrific. Tell me about the move you made from practice to insurance. What was that all about?
Well, I'm pretty open and candid about it. All of the rumors that they have about the practice of law being stressful are probably true. And so it was a needed and welcome career change. But the upside is I've been fortunate to continue to serve many of my former legal clients in my new capacity.
Great. And just tell me a little bit more about what sort of work you do on the insurance side.
So in insurance, as in law, I do all aspects, if you will, of a real estate or project cycle. So if you think about, the old joke is that attorneys are a necessary evil. Well, insurance is a mandatory evil. You can either send your lending documents, it's statutorily required in many instances, and probably not a bad idea to have it. And so I assist real estate owners with their stable portfolios, placing coverage, as well as all aspects of the project life cycle. So you think about a typical project where you might have surety requirements, performance and maintenance bonds, or you're looking at builder's risk and OSIP, CSIP, or other liability products. So essentially, if it touches and concerns real estate from an insurance perspective, I advise on that.
Dirt to development kind of real estate work, and from there on.
Yes, and even with disposition and looking at their insurance products that specifically address, reps and warranties and things. So literally all aspects of the project cycle or real estate cycle.
I'm curious if you ever write environmental products, like covering known environmental risks.
Yes, actually. So our company, Parker Smith and Feek, is a privately held, largely employee-owned company. We are actually part of a large national privately held employee-owned company called IMA Financial. And nationally, that is one of our focuses. We actually have a group that focuses on that and have some proprietary things that we're able to provide in that space.
Yeah, interesting. I was, obviously environmental is one of the third rails of real estate. And, you hear that there are insurance products available, but it's so specialized that you don't encounter them that much. And I'm always curious.
We represent a number of energy companies. So when you're working in that environment, these types of things arise.
I do a lot of work opposite energy companies, and environmental comes up a lot. So let's dive in. So the topic of our discussion today is condominium liability and insurance, and how developers work around the specific nature of condominium liability. And I thought I would start by diving into just a general history of construction liability and condo liability in particular. I should also note that although we are both lawyers, it's not legal advice, and you are advised to get your own lawyer if you are considering a project like this. If you do need a lawyer, you know who to call.
Which is David, by the
way. Practice of law can be very stressful, but I'm still in it. So the history, there's kind of two parallel construction liability concepts in Washington State. There's general construction liability, which is largely based on common law and some statutory, that governs all construction projects, all construction in Washington State. And that sort of underlies everything here, and also underlies the condominium construction liability in particular. And condos have a particular condominium warranty statute that requires developers to warrant. And in fact, it creates an implied warranty in all condominium construction in Washington State that condos meet certain construction standards. And that particular condo warranty has become a significant obstacle to a lot of builders in developing condo projects in Washington. And it's been around for quite a long time. I don't know exactly why it originally came about. I think that probably sometime in maybe the 80s, there was a lot of shoddy construction and there was a lot of water intrusion. There were like particular building techniques, I think like stucco exteriors, that like created a lot of water damage. It created really significant liability for condo purchasers and their associations. And the state wanted to hold developers to account for that, and reasonably so, but they created a pretty stringent liability framework for condo developers that has continued to this day, although construction techniques have gotten a lot better. And it has created a cottage industry of plaintiffs' attorneys who look around for condo projects. They look around at the expiring statutes of limitations, and they convince associations and residential condo owners to file suit. And in fact, sometimes they even go so far as to say that if they don't file suit, they will be personally liable to their owners, which can be very motivating to association directors. And so that has created a lot of money for plaintiffs' attorneys and has created a lot of headache for developers and has, I think, created a lot of trepidation even for insurers. There has been some activity on the statutes surrounding condo liability in recent years, which we will get into. But before we get there, I'm curious to learn from you, Aaron, how developers reacted to the condo warranty statute, and I guess construction liability in general, but like condos in particular. How have developers worked around that, and how they responded with insurance and otherwise?
So the short answer is the developer's response to the warranties and the change in the regulatory environment was to just simply stop building condos. And from a workaround standpoint, largely with the really only the exception of luxury high-rise condominiums, they just simply don't build them. And that these same issues, by the way, are now starting to, from an insurance standpoint, creep into both the single-family home world as well as the townhouse world. Essentially, anytime you have a product that is intended to be owned rather than leased, these concerns arise. And in terms of workarounds, the biggest workaround is really in some level no workaround at all, which is the workaround has been to essentially price in the inevitability of the litigation into each of the units. That said, there have been, with some of the regulatory changes in more recent years, there has been some slight willingness for what we call non-admitted markets, or you think of Lloyd's of London and syndicates, offshore syndicates, to start looking at reevaluating what that risk is and how they might be able to insure that risk, essentially cover their bet. And so there has been a slow growth of interest, but not in domestic admitted markets, for placing liability coverage for condominium development.
Interesting. I'd like to get into that more. In terms of how developers have decided to just price in the ultimate and expected cost of this litigation, how do they do that? I mean, first of all, it's really difficult to quantify what it might be, but more generally, I assume that they have to keep their entities open for a certain period of time in order to avoid veil piercing. I had a conversation with an architect recently who told me that his insurance company makes him sign a pledge every year that he's not going to get involved in condo projects because the professional liability involved in that is apparently too great for that insurer. Have you encountered that before?
Yes. So I even encountered that this morning.
Wow.
There is my earlier comment about we're starting to see in some instances the same concerns. We're starting to see the same concerns even for single family homes or townhomes as condominiums from some carrier perspectives. And what it boils down to is when you have a product that's intended to be owned, there's going to be somebody there that may have a claim, and they're going to be invested to potentially bring that claim if they're able. So yes, unfortunately, there are. It is increasingly difficult for anyone within the greater development industry to not have an exclusion that would prohibit it, that effectively prohibits them from being involved in condominium design, construction.
That sounds like a huge obstacle to the industry. And, sort of put on my my advocate hat here and say, like, the legislature has been very interested lately in solving this missing middle housing issue. Like, we've got we've got a fair amount of luxury, high-end real estate. We've got some like lower-end real estate, but like we just don't have that like starter home $400,000 to $800,000 product. And the legislature really wants to help solve that. And part of what they've done is like try to confine the condo liability to an extent. And they've done a lot of other things to help address the issue. But like, here's a great opportunity for them to fix something that is broken in our system and allow developers to bring this entirely different kind of product to market. And if we can't get a design professional to design your condo building, then it's interesting, by the way, that it struck me as you were saying this, that there's this concept of a unit lot subdivision, which I'm sure you're familiar with as a land use attorney. And a unit lot subdivision, I think, would not be subject to this specific condo warranty statute, although it depends, I think, a bit on how you read book of sales.
It's very, very interesting that you bring that up, especially in the context of what the legislature adopted a year ago and trying to provide some of this missing middle housing with the attached dwelling unit and detached additional dwelling unit.
And let me pause for that bill required considerably higher density on all lots in Washington State, and especially in the city of Seattle, for example. All residential lots, or almost all residential lots, are zoned for 4 units now. Some of them zoned for up to 6 units in what we previously considered single-family neighborhoods. And they included in that legislation a requirement that all jurisdictions include the unit lot subdivision allowance. Seattle already had that, but like other jurisdictions now have to adopt it. And to summarize, unit lot subdivision, as I conceive of it, is basically a condominium, but within the framework of the city's own zoning laws.
Yes. And so you just got to the punchline with that, is that it operates effectively the same as a condominium, but it is not regulated under the Horizontal Regimes Act. So they're technically not condominiums. One of the interesting things, and this comes from the years of practice, is that condominiums were always regulated at a state level, not at a local jurisdiction level. So there were clever ways of condominiumizing what might have already been sort of considered to be like single family lots to allow for additional development and kind of take it out of some of the painful permitting process of a city like Seattle.
Mm-hmm.
Now, unless there are restrictive covenants, private restrictive covenants on the property that state otherwise, there is really no such thing as single family zoning anymore. And there is almost an express encouragement to allow or to use the condominium regime in order to achieve that additional density and have for sale product rather than just your typical detached additional dwelling unit. People would historically call it a mother-in-law unit or something, but that you can actually sell that, which of course begs the question, if you are condominiumizing a single family lot or a zoned single family lot and constructing additional dwelling units within those airspace condominiums, are you now building condominiums?
Right.
And that is an unforeseen, I think, an unforeseen consequence, or though there will be unforeseen consequences by virtue of the way the legislature, in trying to rectify the middle housing issue, but not fully fixing the condo issue, is we're going to see a collision here.
Yeah, I agree that, I expect that once the missing middle housing bill, it's HB 1110, gets fully implemented next year, and suddenly all residential lots in the city are zoned for 4, we're going to start seeing a lot more development. And after that, we're going to start seeing a lot more claims, people saying like, there's water coming in, or my furnace doesn't work, or whatever. And that's going to trigger a lot of people to consider like, hey, are these unit lot subdivisions actually condominiums within the meaning of Wakiowa? And therefore, are they subject to the specific liability statute? And also there's the underlying construction defect as well. And for property casualty, insurance premiums are going up tremendously. I mean, I just got re-rated for my car insurance, and it was shocking. And it's happening all over the map because I'm told, the scope of claims is just getting so out of control. Labor costs are really high. Materials costs are really high. It costs so much to cover these claims that's got to come from somewhere, and of course, it comes from premium payers.
That's right.
So that makes it all the more difficult to insure these things. But at the same time, we're looking at a moment in the cycle where there's the universally acknowledged housing shortage. We need to build more, and that means that there's prices have been somewhat inflated for years and will likely continue to be inflated for years. And we're looking, Fannie Mae predicts that mortgage rates are going to fall, I think, to 6 flat or even below 6 by the end of 25. So buyers on that lower end are going to be motivated at that time, especially as Gen Z and, I'm a millennial myself. I think we've kind of all aged into homeownership at this point, but the Gen Z starts to look at home ownership. That entry level price point is going to be so important in the next couple of years. But at the same time, it's difficult to build for all the reasons we've discussed. So you mentioned we talked about we mentioned WCIWA, the Washington Uniform Common Interest Ownership Act, which was adopted in 2018. It just completely wiped the board clean on how not just condominium, but all common interest ownership communities, plat communities, we're talking about like subdivisions and even co-ops. It just changed how all those things are regulated. In some ways for the better, in some ways for the worse, and in all ways just for the much more complicated. And so that happened in 2018. All projects that were initially completed after July of 2018 are now WCIWA governed. And WCIWA unfortunately imported the Condo Liability statute from RCW 6434, which was the previous condominium statute. And it just more or less imported it verbatim. However, in 2019, the legislature adopted an amendment to WCIWA that confined the scope of risk somewhat in WCIWA. And I want to hear from you a little bit about how your clients and how your insurers have been treating that. But before I do that, I want to summarize what they did. So in 2019, Senate Bill 5334, the legislature did a handful of things. First, it eliminated the personal liability for HOA directors and officers for failure to bring a claim on a construction defect, which I think is fairly significant. We'll get to that in a minute, in part because plaintiffs' attorneys, part of their pitch to HOAs was, look, you can be personally sued if you don't bring the claim and the statute of limitations expires. So that angle was essentially eliminated by the legislature. In addition to that, the state of the law before the change in 2019 was that a claimant, which is usually a condominium purchaser, would have to establish that the condominium was constructed in accordance, or rather was not constructed in accordance with, quote, sound engineering and construction standards, and also constructed in accordance with, in compliance with all laws then applicable to the improvements. The concept of sound engineering and construction standards was very vague and very broad, and plaintiffs' attorneys loved to play around with that concept. So in 2019, the legislature changed that standard to engineering and construction standards generally accepted in the state of Washington at the time of construction. So we've gone from this vague standard of sound engineering and construction to a somewhat less vague standard of generally accepted construction and engineering standards. But they eliminated the concept that it has to be constructed in compliance with all laws. But they incorporated into the concept of engineering and construction standards that it has to be in accordance with applicable building codes. So building codes is somewhat more narrow than in compliance with all laws, but, in my opinion, they're more or less the same. Regardless, we do have this concept of a generally accepted standard that at least pins it to something a little bit more precise and allows us to consult on experts on what is generally accepted standard in Washington State rather than what is sound engineering and sound construction. In addition to that, so a claimant, a purchaser, has to establish that it wasn't construct it to those standards, but also has to establish some damage. And that damage takes the form of a, quote, adverse effect. So before 2019, the claimant had to state that there was some adverse effect on the condominium or the unit itself. And there was very little guidance on what an adverse effect was. It previously just said that an adverse effect must be more than merely technical and must be significant to a reasonable person. But beyond that, we didn't really have any information. And in fact, the legislature had previously said that a purchaser isn't required to establish that the adverse effect rendered the unit uninhabitable, just somehow adverse. Now, after the change, we have a little bit more information. The adverse effect must still be more than merely technical and must be significant to a reasonable person. But now it also has to have caused or will cause physical damage to the unit or to the common elements, or materially impaired the performance of the mechanical, electrical, or other building systems. Or it must present an actual and unreasonable safety risk to the occupants of the condominium. And I think that this change is really quite significant because we now have something to talk about when it comes to deciding whether an effect is adverse or not, especially in that it has to have caused or will cause some of this damage, and not just might cause or is likely to cause, etc. And those can be really quite important. So the legislature has added a degree of precision here that was missing before. So tell me about how these changes to the law, again, back in 2019, have affected what you're seeing out there in the marketplace.
So the interesting thing, insurance companies are repeat players.
Yeah.
And the changes in the law, for better or for worse, it's good that they made these changes, and these are welcome changes. But an insurance company or insurance companies, they want to see how this plays out in reality. And we get into sort of, I don't know if you want to call it a chicken egg problem or what have you, is everybody's waiting for somebody else to let something go forward and see, is there a claim? If there is a claim, how does that claim play out? One of the biggest challenges, and very early in my legal career, like many new litigation associates, I did some condo defects and other construction defects litigation. In fact, it was my first solo trial was a construction defects case. And you kind of watch how in the course of any litigation, how things play out. The big thing is everybody's looking on both sides for a silver bullet. The silver bullet being, well, what can we bring a summary judgment motion on, either to establish liability or to eliminate a potential claim? Mm-hmm. And the loosey-goosiness of a lot of this language, and it's intentional in my opinion, could be wrong, but the loosey-goosiness is to basically avoid there being a summary dismissal of claims at an early stage.
Let me pause to explain to our listeners what summary judgment means. Summary judgment is an early stage ruling case where one of the parties asks the court to, or actually, I guess it would be in our cases, ideally, the defendant is going to be asking the court to dismiss the case because there's no material issue of fact. The problem here, what you're saying is, well, when the standard is so loose, they can allege any kinds of facts, and if we dispute really any of them, then there's an issue of material fact and the case has to go to trial.
That's exactly it. And I will say it was extremely rare in the early and mid 2000s to actually see any of these cases go to trial. Mm-hmm. They generally resolved in a big law firm conference room, not unlike the one we're sitting in right now.
With a big novelty check, I'm sure.
Yeah. Where all of the carrier representatives would be present, and the representatives from the general contractor, the owner, the subcontractors, and essentially everybody would just figure out what piece of the plaintiff's pie they were willing to pony out. And I think that insurance companies obviously became pretty weary of that drill. And I think that at this point, they want to see how the new language plays out. we haven't really gotten to see how it plays out because it was adopted essentially going right into COVID. Things shut down. As things have reopened, we really haven't seen an appetite for any type of development. If you start to just think about condominiums, typically we're talking about multifamily development as just ownership product. Mm-hmm. Well, even in the multifamily space, and notwithstanding the fact that we have truly an affordable housing crisis going on here in the Puget Sound, the only units that are being constructed are units that are being subsidized by affordable housing programs. They are not subsidizing for purchase units, in other words, condominiums. I don't know that they wouldn't if there weren't restrictions in place, and that's another discussion. Mm-hmm. But the point is, in the last couple of years, there just hasn't been the construction to test whether or not the changes are going to actually play out, at least in a way that is in the insurers' minds, a balanced playing field when claims arise. I will say that in talking with some carriers and talking with some underwriters, the fact that you actually have to prove, and I'm going to read the language here, an actual adverse effect. Effectively, you have to show that there will be harm. Yeah. That's meaningful because prior regime was almost, I guess, what we call like a strict liability regime. If you didn't put a nail exactly where it was supposed to be and the rest of it,
there was a crack in the drywall that's out of compliance, and I get diminution in value or I get proof of damages, whatever.
Right. So where we are right now is you have at least, especially, and I'll go back to earlier comments about what we'll call domestic. So like U.S. carriers, they're still not wanting to touch any of this. I think that I know that there is a willingness when you go to some of the offshore markets, the non-admitted markets, and, literally like Lloyd's of London, mm-hmm. you can put together a patchwork of coverage through various syndicates, but it may ultimately prove to be cost prohibitive still for anything but a luxury high-rise, concrete, steel, glass building.
Yeah, and I think that's part of what we're seeing is like, unless you're building an extremely high-end product, like $1.5 million plus for a condo unit, it just doesn't work because premiums are so expensive and the risks are so great that it just doesn't make sense to take on that kind of risk for, like I said, your middle housing kind of product. And I think what you're saying is it's just an accident timing that we haven't been able to test this yet. This was passed in 2019. And then boom, January 2020, everything changed. Everything shuts down in March. And we didn't see any construction at all for the better part of a year, much less condominium construction, because everyone was still pretty skittish. And only in the last 2 years or so has that really started to recuperate. And still, we don't have any examples for what has happened as a result of this legislation. So,
Yeah, high interest rates at this point, and they're not the only factor in the market that are holding development back, but essentially we rolled out of COVID. We finally got back to work, so to speak. Construction restarted, and at best, we were able to hopefully complete projects that were started and installed. I mean, I have a project here in Seattle. It was one of my last entitlements as a land use attorney, and fingers crossed they're going to get C of O in probably October of this year.
Just a multifamily.
That project probably should have been completed roughly a year ago, but we had COVID, we had concrete strike, and the rest of it. If that exact project were to have received its entitlements within the last year or two, it would never have come out of the ground because the interest rates just
right. And hopefully they're still rate locked on their pre-COVID financing. And yeah, I mean it's hard to build. It's 7.5%. It's hard. Yeah. And so again, as rates come down, we keep hearing it's going to be happening. Hopefully we'll start to see some thawing in the marketplace. But there's a lot of wins at play in this, and it's hard work out there for a builder. There are some developments, like we've got a number of Canadian developers in Washington, in Seattle, building high-rise type product. There's Avenue Bellevue out on your neck of the woods on the east side.
Just opened,
yeah. And some of those are starting to come online here and there, bit by bit. And so, I'm hopeful that they don't get sued. But I am hopeful that if they do get sued, then we have a test case for how to defeat these claims, and does the legislation create an effective standard that mitigates risk for carriers and for developers? But we'll just have to wait and see. And meanwhile, there has been a lot. I don't know, like occasionally, sort of person I am, I take a cruise through the King County recordings sometimes and just like see what's going on out there. And there's been a lot, dozens and dozens and dozens of these single family carve-out lots where, there's a single family home, somebody builds an ADU and a DADU, and they condominiumize those and then sell off the ADU and the DADU. There's been a lot of those out there. And, I think that, again, if there's somebody with ownership and somebody who's motivated to bring a claim, then, maybe they're going to try to make a claim based on that, but it's going to be so small that it's hard to imagine it's going to be really big money and really pretty material. There have also been these sort of infill townhome type projects within city limits and then sort of on the periphery. And I don't know what's going on in the litigation side of things with those. I know that they've been happening the last 4 years. And by the way, 4 years is the statute of limitations. So this was passed in 2019. We're already 2 years past that limitations period for a lot of products. Again, COVID interrupted everything, so we don't really know. But the statute has expired, and so we should have at least a few test cases. But I haven't seen what's out there. There hasn't been any.
I actually think that your observation that where we're going to see it is there's going to be a luxury condominium project that comes online as occupied, and then that will be the test case, and that will be the thing that tells the whole market, including the legal professionals, the design and construction professionals, as well as the insurance professionals, well, how does this actually play out in reality? I will say, and again, not questioning the cases at this point, and they were certainly, almost 15 years ago, but there was a lot of head scratching and consternation that came out when we had the two appellate decisions issued that really kind of put what I will call the final nails in the coffin of condominium development back in the early to mid 2000s. It'll be very curious to see how the legislature's words are massaged by the attorneys, but then ultimately interpreted by the courts when they get in. I'm an optimist. I will share that from a property insurance standpoint right now, we've finally seen a flattening in rates. Even in some cases, we actually had a fairly significant renewal within the last week. That was the first one in 3 years that there was actually a decrease in rate being charged on the property side. And part of that is, we had massive catastrophic losses globally due to wildfire, hurricanes, windstorms, hailstorms, all of these things. And thankfully, and I knock on something, we haven't seen that in the last couple of years. And so the reinsurance market has softened, which has allowed for the carriers to not try to pass those costs on to their insured. So hopefully, at least from a going forward in the near-term construction standpoint, insurance itself won't be a major impediment, just the cost of the insurance, especially on the builder's risk. However, on the liability side, in the same time that we've seen maybe less named storms and had a little reprieve from that, we have seen an increase in what we call nuclear verdicts, which are verdicts of $10 million or more. Mm-hmm. Washington State was not on the list of nuclear verdict states until about 2 weeks ago. And unfortunately, Washington has now been put on the list with Texas and Illinois, California, New York, and carriers pay attention to these things. They look at they look at not only what could be sued for, but what the appetite is of the court system to fully award the damages that are being sought, if you will.
What was the claim in that nuclear verdict?
I'm embarrassed to say I knew it, and I'm just blanked on it right now.
Some catastrophic disaster, I guess, or something. Evidently, the court's considered worth $10 million plus.
There was a case, and I believe it was the Monsanto case about 2 years ago that fell into that, but there have been other verdicts since then, which now there have been enough of them that Washington is sort of officially, if you will, on the watch list in that perspective. And so you see this sort of from a liability standpoint, if you will, like social inflation and the value, if you will, of claims increasing. So carriers are mindful of that. And again, that goes back to we need to kind of see how the revised regulatory regime actually plays out in the courts. And the question is, who's going to stick their toe in first to kind of be willing to, they don't necessarily want to be the test case, but kind of see how it plays.
It's a belling the cat problem. It's to the benefit of all the mice to bell the cat. The one mouse who does the belling is at particular risk. So
well put.
So I wonder, by the way, you mentioned that. I wonder if we're going to see an increased push for tort reform again. We saw that in the 90s where like everyone was like, "It's just, you can't do anything." There's all these tort lawyers. But now that it's so difficult and expensive to insure things, the reason is because it's really difficult to litigate these torts and warranty claims. I just wonder if we're going to see that again in the next few years. I don't know. Yeah, you heard it here first, guys.
Yeah, it wouldn't surprise me. Liability coverage has been going up more than 20% year over year the last couple of years.
Yeah.
And in particular, it's hitting housing providers very, very hard.
Yeah, yeah, absolutely. One other piece of recent legislation I wanted to bring up, just for the sake of thoroughness, is last year the legislature also adopted this concept of the construction defect professional. I don't know if you tracked that one, but it's an additional layer that a claimant must have a construction defect professional, which is somebody who has some verifiable training or experience in the construction world to help them write their claim. This comes in the pre-claim process where there's this initial negotiation period where you're supposed to, HOA or the owner is supposed to describe the claim, and then we're supposed to talk about it. And then if we don't come to a settlement there, then it can actually go to court. I think that has become an exercise of performance more than anything else. And the addition of construction defect professional, I think, is a nice gesture, but probably not really dispositive in making this work.
It is. I was almost amused kind of when I saw that and looked at what that would be. In years of practicing land use law, you've got that whole you must exhaust your administrative remedies all the time before you can bring claims. And this seems to be sort of like in that vein of exhaust an administrative remedy. But I don't really recall ever not having brought a lawsuit when a lawsuit needed to be brought, if you will, notwithstanding that we always exhausted our administrative remedies.
Right.
And the one sort of positive, though, that I see with this, and I could see insurance carriers appreciating this exercise, is when one considers how coverage is triggered, this exercise of having the construction defect professional sort of, if you will, like succinctly and carefully and with specificity lay out what the potential claims would be, it certainly helps from a carrier standpoint, them looking at this from a loss control perspective to see, well, what may or may not actually trigger coverage. And so I think that just purely putting my insurance professional hat on, I think it's probably ultimately a positive in terms of us moving back toward we're going to be able to start providing coverage and not just really, really cost prohibitive offshore market coverage for condominium projects. However, it's still, the belling of the cat. We need to see how things play out.
I think that's really interesting that the construction defect professional process can help insurers sort of define the scope of their own risk, which, is or is not beneficial for the developer, because if they decide that it doesn't trigger their claims, then too bad for the developer. But it does, to your point, make them a little bit more amenable to writing insurance policies that wouldn't necessarily have been written before or would have been prohibitively expensive.
Well, and I'll just say sort of the flip side of it is that in my humble opinion, a lot of the construction defect litigation that we've seen, particularly against condominiums, was actually fueled by the availability of insurance. And the arguments over whether or not something actually triggered coverage or, these were covered claims, that was actually a huge part of that litigation. I had a former colleague who shall remain nameless, who actually specialized in trying to find coverage for these types of claims. And I think that a lot of plaintiffs' attorneys would not pursue claims if they didn't think that there was the proverbial insurance pot of gold at the end of it. So whereas nobody, look, insurance is a product nobody wants to buy and nobody wants to use. That said, if you're a developer and you get sued and it turns out your insurance doesn't cover it, that's not a good thing. But I don't know how many times that same claim or that same lawsuit gets levied if they also find out that the developer is
naked.
Exactly.
Yeah.
So
that's a really interesting point that, you don't
want to sue it as judgment proof.
Right. Judgment proof.
They don't want it.
Judgment proof is usually a concept that applies to, people of limited means. But if we're talking about what is an attractive pot of gold to a plaintiff's attorney, then if you have a net worth of $3 million as this smaller time developer, or even $10 million, are you going to go after this guy, pierce all the veils to get to this ultimate beneficial owner, and then take his house away? Is a court going to go for that? Obviously, as a lawyer, I would never advise a client to go naked on insurance, but it makes you wonder if a developer is looking at this and saying, well, insurance is too expensive. Maybe I'm willing to just take the risk. And if there's no coverage, if there's no there, then maybe there's not going to be a lawsuit in the first place.
Well, if you're fully self-capitalized, you can do that. Again, going back to insurance being a mandatory evil, lender's always going to require it. What I sort of see as kind of the in-between scenario potentially playing out is that if the exercise of using the construction defect professional tends to end up in a situation where you have a bunch of potential claims that actually wouldn't trigger coverage, and the developer has done everything right in terms of their corporate maintenance. They properly maintained the LLC. They had their insurance. They were capitalized. They did everything right, but it just turns out the insurance doesn't cover those specific types of claims. Then I think that becomes a disincentive.
So the case suddenly looks less attractive. Once the plaintiff's counsel gets into it, looks at the policy, and learns that actually it's not covered, maybe they drop the case. But they also, of course, have to convince their clients to drop the case because they're not the...
Sometimes people want a pound of flesh.
Yeah, and that's always worth considering is, especially when we're talking about residential homeowners, people get really emotionally tied up in it, and for good reason, but it tends to influence the direction of a case. I wonder if, it's a mandatory factor of financing that you have to get insurance, and probably you have to get general commercial liability, of course, and maybe you even have to get these wrap policies depending on the kind of project you're doing. I wonder if there's a way for insurers to just craft their policies in a way that satisfies the lender's needs, but doesn't actually create too much exposure on this back-end liability, because the lender's out. By the time the unit gets sold, the lender's out of that unit. By the time the last unit gets sold, the lender's out entirely. And so they no longer have a concern about protecting their collateral. So why do they care that much about what this sort of tail liability looks like? There's a potential lender liability claim, I suppose, but it just seems pretty remote. Anyway, it just strikes me that perhaps there's a way to craft these policies in a way that makes insurance available at an affordable rate, satisfy lender requirements, and allows this product to be built, but doesn't actually create too much exposure for the carriers.
Yeah, interesting question. I'll just say that my observation over the last couple of years has been that there's a lot of boilerplate language in a lot of lending documents, even from major financial institutions that hasn't been updated in a number of years. And it's actually pretty darn hard to find coverage that meets the lending requirements because some of these things don't exist anymore.
Insurance is a specialized language. Somebody told me that it's like learning a language. It makes no sense until you actually understand it. And then once you understand it, you can speak the language. But like, it's an extremely specialized world.
It's funny you say that. I jokingly but seriously say for the last couple of years since I made the career change that when I've sat at meetings, I have my phone in my lap and I'm just looking up the acronyms that people are using.
What an OSIP. That is a wrap. Well, I don't think that's all I have on the agenda. Do you have anything else for our listeners for the good of the order?
I wish I did. I used to get paid by the syllable. But, this is good. This has been really fun.
Yeah.
So thank you for inviting me to do this, David.
Thank you for coming in, Aaron. I appreciate you. We'll hopefully do it again sometime.
Absolutely.
All right.
Thank you for listening to this episode of Lay of the Land. To listen to past episodes and receive notices for new episodes, subscribe by searching Hub Talks. That's HUB Talks in your favorite podcast app. Tune in next time for more real estate industry insights.